traders from across the globe, and welcome to the 1451st installment of Short-Term Trading Live with Oscar's educational videos geared to teach you the art of technical analysis. Traders, there's many out there. I film them almost every evening. In fact, OMNI Camp 2.0 is so close to being done, there's nothing left but finishing touches. Hooray, hooray. And I'll be back to filming just about every evening. And I love doing these videos for you, and I love teaching you the analysis, so I'll continue to bring you these videos. Before we start moving on what's on this board here, please know that futures trading is extremely risky, causes substantial financial loss, is not suitable for the average trader, and you must have risk capital to lose. More importantly, know that a stop in this industry is absolutely your best friend. And why? Because with this insane volatility lately, you get into a position that starts to go against you more than you want your wife or husband to know about. You know what you do, right? You don't get out. You start crapping in your pants. You start biting your fingernails. You don't answer the phone when your broker's calling. How many of you are guilty of that one? And you don't get out of the trade. So what the stop will do for you is it will knock you out when you freeze and don't know what to do, which is what you put the stop in there for to begin with. It's called a stop loss on most occasions. You put the stop in to stop the loss, and then you can regroup and reapproach the market. But you can't do that when there's a market going against you and ripping every bit of equity out of your account without a stop, right? Put your stops in. Let's see who's going to interrupt the video. Oh, Thomas, you're calling right in the middle of a video. In fact, you're on tonight's video right now, brother. Omniac Thomas on the line. But I don't know how long I can speak with you because I don't want the fans to get nuts. But yes, I'll call you right after I'm done with my video, brother. All right? You as well. Cheers. He, I have to say, is my best Omniac student that's ever been through Omni Camp so far. Go Thomas. All right, so let's move forward. Traders, what I wanted to tell you about what's going on here is this. Out of nowhere, and don't forget, we just came out of Easter Sunday / Easter Monday, Europe and the U.S., so markets are a little weird, but Omni flips to a short-term seller of rallies as of Monday's close. Today's close, Omni goes bang and goes into a red Omni. It only wants to start the day off selling rallies. We'll see if it wants to continue selling rallies all day. Volatility's been very strong, up and down. Sometimes you start off one way and end up another. We're starting off red arrow, selling the Omnis, and even the S&P and NASDAQ. We'll see which way the day ends up. Same with crude, by the way. And you know the old adage right now, even though there will be a separation or a decoupling at some point, but right now it is what it is. And how goes crude? How goes the market? So right now, Omni has gotten slightly bearish on crude as of Monday's close. We'll take that too. Grains, they are going to have a big year this year. I left you off with a video last night to show you the grain charts. I will get right back into those grain charts in just a moment. And then gold. Even though it came off for the holiday reversal, is it getting bid again? Let's look at the charts. Come to livewithoscar.com. Come join me in my free live trading room. I will see you there. With no further ado, let's go look at some charts. Okay, traders, the very same chart I showed you in last night's video, the soybeans daily bar. I have an Oscarism way of breaking down, I like to call a pennant. I break it down into 4 equal quadrants. Then I expect a false breakout at a certain point and a real breakout at the 75% mark or somewhere in the 75 percentile. We received our false breakout. We actually had the real breakout. Now we're above the 200 bar moving average and in the form of a nice little pennant flag. Very nice. Go soybeans. We expect beans, maybe not today, but we do expect beans to continue higher throughout the spring and the summer. Nothing goes straight up. This formation plus what happened before this shows us that we're likely going to have a strong summer in the grains. Let's continue watching. Then you've got the corn. Traders, an inverted head and shoulders. This is the opposite of what I like to show on other markets is the upright head and shoulders. That would be bearish. This is an inverted head and shoulders, which usually is bullish. Left shoulder, head, right shoulder. Corn's been gone down for quite some time, but look at this. You put your bullish inverted head and shoulders formation in. Now you've gotten past my Omni Trading Academy's proprietary moving average. So check 1, inverted. Check 2, at this point, we're day traders, but right now we are above the OTAPL, or Omni Trading Academy's proprietary moving average, and we are in the Oscarism known as the F flag. All are bullish things. We like corn now, we like corn moving out through the spring. For short-term trading, we are going to be buying the dips in corn for trading on Tuesday, and then we've got this. The Dow Jones Transportation Average Traders. I showed this to you 2 videos ago, and where were we? We were right up here. And well, not 2 videos, maybe 3 videos ago. And I showed you this pattern and this channel, and I drew an empty circle and said we should likely get down to about here. Well, that circle and the 200 bar moving average seem to come into the same spot. So, support, 200 bar moving average, we're getting to it. It should hold and rally, but if you look closely, we've got a whole down day before we ever hit that line. Omni, short-term bearish, maybe we'll head down for that line. That would be a strong down day if it went. We'll see what's going to happen. Interesting area we are getting into now. Then you've got your E-mini S&P. You've seen this in enough videos. What I want to remind you is some of you have very short-term memories and forget that you are in a very large formation. So now we've had a bit of a rally on the right shoulder of a head and shoulders formation, but I've been telling you about this head test area for weeks now. Well, here we are getting to the head test area in your E-mini S&P. So you have a valid left shoulder head, right shoulder head and shoulders formation, and we are now receiving this head test. But believe it or not, you got a nice little bull flag right there at the head test. So we'd like to see the head test, in all honesty, blast right through and just continue moving higher. But Omni pulled a bearish Omni for Tuesday. We are here starting to penetrate the head test area. I say we just follow Omni and see where this thing wants to go. Remember, we'll have stops in no matter which way it goes, but that's the beginning setup for the Omni trading. We'll see where we end up. Then, once again, as I mentioned, how goes crude lately? How goes the market? Interesting chart. Feast your eyes on this one. Very, very strong average. I rarely show it. It's not your average, if you will. But it's an average that I like to play with when markets start to whip around as much as crude has. You'll note that we haven't, what you can't see is back here, we haven't been near this average for a year. Finally, we hit the average and fell at it. Come all the way down, and look what's happened. We've gone up, up, up. We touched the average 4 sessions ago and headed right back down. Furthermore, we are now below this little channel support line as of the close on Monday. You are here. So you've got that to look at. Then you take the exact same chart, you add a little more analysis, and this is simple analysis I'm showing you. Very simplistic, very rudimental. So what I'm showing you now is the very same chart. You see it's failing at that average, but look at the monstrous channel it's been in, top and bottom perfectly. And it's got up into the channel, sort of failed, and if you ask me, this could literally be a baby head and shoulders right there. At the average, at the resistance of the channel, a lot to be considered here. So crude with the red Omni, probably you'll get a down day trading on Tuesday. Now remember, we are coming back right now from Easter Monday. Europeans were not involved in the markets. Anything's possible once they start trading this evening. But I am giving you the analysis as I read it, and we trade what we see, right? And that's what we see. Then finally, you've got gold. Traders, this has been an absolute masterpiece, this gold chart. Before anyone's seen it coming, Omni gave us the cup and handle. I gave it to all of us, all of you as well. Cup and handle. Then I said, forget about the cup and handle. That's a bit nebulous. Why don't we just call this a nice little bull flag breaking out? But it was the handle of the cup and handle. Let's call it a bull flag too. They're easier to see for the average novice trader. Then you've got cup and handle above the 200 bar moving average. It's a bull flag. The whole darn thing is a big bull flag. Fantastic if you ask me. So yes, the gold could come off. It had its holiday reversal right here. Now it probably wants to get back above this trend line and continue towards the upside. That is what should happen if the S&P does come off on Tuesday. So the analysis makes sense. Pick and choose from this analysis what agrees with your own. Do your own homework and meet me at livewithoscar.com. So traders, you've seen my technical argument for why I tell you that we're going to start off as a seller of rallies in emini, S&P, NASDAQ. Will it stay that way all day Tuesday? Well, that's a different story, but we're starting off that way on record. Same with crude. We're not going to actually trade the crude, but we know that how goes crude, how goes the emini, S&P lately, so we'll see where that goes. Grains. You see where it is? I showed you sugar. 2 weeks before it started, sugar exploded. I have been talking about soybeans. It is starting to go. I mentioned corn. That's starting to go. Grains in general are slowly starting to go. Pay attention to them. You got plenty of time. Don't rush out. Then gold. If the emini S&P is going to run into a wall of resistance and back off, the gold is likely going to get bid again. So let's see what we want to do there. We're going to play gold very gingerly. It'll have to be a big dip if we're going to buy anything at all. Traders, that's what I wanted to show you. Remember, OmniCamp 2.0 is just about done. Fill out your OmniCamp applications. I will house 8 of you in my OmniCamp extravaganza. It is OmniCamp 2.0. It is a place where you will spend 4 days and nights together creating a small fraternity out of the Omni class. I only hold 8 at a time, so it's going to be a very small, intimate session. I want you to come out to Vegas and learn this analysis. Fill out your OmniCamp applications at livewithoscar.com, and I'll contact you shortly and give you the first date at our new facility. All right, traders, livewithoscar.com. I'll see you there. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with keeping those emotions at bay is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, livewithoscar.com. I'll see you there. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.